Good morning, everybody. Welcome back. It's about 11 o'clock a.m. on Friday, August 31st, and we're joined by Edward Meir of Commodity Research Group. How are you doing, Ed?
Very well, Michael. Thank you for having me.
It's great to have you. We've been speaking with Andy LeBeau, and you guys got a great team, a lot of great information. Andy covers the energy side, and I know your specialty is more on the macro and metals and FX, and so it'll be great to hear some of your information on that side. Uh,
Sure.
so, what are you thinking
All,
these days?
well, first of all, full disclosure, I was away for sort of two of the last 4 weeks in August. So I just got back a couple of days ago. And when I left mid-August, everything was in a free fall. Gold, base metals, even oil was weak. But then what happened, the dollar kind of topped out and started to sell off and gave the whole commodity complex a boost going into the second half of August. In fact, Michael, we are publishing our next monthly report. It should be out early next week, just as an aside. But back to the markets. You know, None of these markets are really trading on fundamentals. They're all trading right now on two things, which is the ups and downs of the dollar and what's going to happen with these trade talks, multi-country, multifaceted trade talks. It seems whenever we have progress in one area, another area sort of goes pear-shaped. So right now, things with Canada and Mexico seem to be okay, or at least they're progressing. That gave markets a bit of a boost earlier in the week. We think the Canadian deal will likely happen along with the Mexican deal. But really, the elephant in the room is this Chinese trade levy. We heard yesterday from President Trump's Bloomberg interview that he may impose $200 billion worth of tariffs on the Chinese. This will take place by the end of September. The comment period ends on, I think, next Wednesday or Thursday, and then you have a couple of weeks for more paperwork and filing, and then the tariffs could go into effect. The problem is the Chinese don't have 200 billion worth of tariffs to retaliate with.
Right.
So they're going to impose non-tariff measures. And this is what scares me a bit because then things really start becoming hairy. What could they do? They could make foreign investment more difficult. They could create delays and regulatory hurdles for American companies operating there. Um, they could not cooperate with President Trump on key issues like North Korea or Iran. And you could get even more worrisome scenarios out there, such as the Chinese telling Apple, you have 3 months to pack up. Keep in mind, Apple produces 500,000 iPhones a day in China. You cannot replicate that even if you wanted to anywhere else.
Well, that's
So
interesting because there are two ways of looking at it from that side as well. One is because I agree with you on what you're saying. It's a lot is taking a look at what's going to happen with this. China's obviously a very serious player, a very big player. Why then haven't the equity markets shown any sort of fear, or for instance, Apple, which is at
sure.
all-time highs?
Sure. Well, two things. One is the markets expect some sort of a deal. They think this is all posturing. So they're not that concerned with it. And keep in mind, the tariffs we've had so far are peanuts. They're about 60 billion on each side. They don't even register. So the markets are still looking at this as part and parcel of a negotiation process. The other positive for the markets, as you know, you've covered this in depth, is we're just turbocharged on the earnings because of the tax bill, and the economy is doing great. So the focus right now is not on potential fallout from the tariffs. But if you start this 200 billion and you start seeing signs of a slowdown in the US, the markets, I think, will be in trouble. So right now, it's not on the radar.
And then, so take me through the different reactions if things don't go well with China, like for instance in the metals and then in the dollar, because you were referencing that earlier, that
Right.
you think the commodity market is heavily focused on the dollar, which it has been for decades.
Right.
So, what are your
Me-
thoughts there?
Metals right now, they're focused, they've kind of been coming down over the last couple of months. They all bottomed out just about 2 weeks ago. We've had a little bit of a bounce, but nothing very spectacular. They're very worried about the tariffs, and they're also concerned about slowing growth in China. The numbers out of China are sort of a little hot and cold. The property market is doing well, but the trade side is weakening, and the retail and the government spending side, the rate of growth in both those categories is also leveling off. Couple that with the fact that many of these metals are not really tight. At the beginning of the year, people were saying, oh, we're going to have huge deficits in zinc and copper. That's not materializing. So you have a combination of all these variables coming together. And I think if you get, an escalation in the tariffs, for example, we've levied a duty on Chinese air conditioners. Sales of Chinese air conditioners have really dropped in the States. The flip side is copper demand to make the air conditioners in China has also dropped. So you see, the whole thing kind of comes around full circle, impacting these metal markets.
So on that note, though, don't they have to buy the air conditioner from somebody else or internally? Like, so that demand is still probably unchanged, but where are they buying them from?
Well, the US will have to buy it probably from other Far East manufacturers. They'll be paying a higher price. The Chinese, in turn, will either have to find new homes for their air conditioners, or if they don't, because this is a very competitive market, they just will make less. So there'll be less Chinese consumption of metals, and that's a big problem because China consumes about 50 to 70% of all these base metals. So, South Korea isn't going to take over, or neither is India. You know, China is what we look at very, very closely when it comes to copper, zinc, nickel, whatever it is
Yeah.
in the base metal
One
space.
thing I just wanted to break in with, and you can comment on, because it's actually breaking as we speak. So the Canadian foreign minister is saying that we're working hard, but we've not reached an agreement. We'll
Right,
continue to stand up for Canada's national interests. And actually, it's on CNBC right now. She's talking live. And
right.
so it looks like S&P is really unchanged on it. It's maybe dropped a point or two. Dollar CAD is trading up near the high of the day. It's at 130.55, and so that'll be interesting to see how that continues to play out.
Yeah, it'll be interesting to see. Earlier this week, we had the impression there was a hard Friday deadline for the Canadians to come on board. But yesterday, Mr. Trump said that, he's flexible. If they need a bit more time, he'll give it to them, because they really have only just a few days to put this deal together. So I think they will reach something, some sort of a compromise, but we may not see it today.
Yeah. And then what about on the currency side? We've had some, you said you've been out of town. You probably had some time to think about the markets. And then if you take a look at the charts when you come back, emerging markets have just gone crazy.
Yep.
What are your thoughts there?
Well, the emerging markets, we've seen this kind of pattern play out before. Keep in mind, every time we start raising rates, there are shudders in the emerging markets, and we've had two rate hikes over the past 6 months. Couple that with some of the geopolitical tensions with Erdogan in Turkey and Argentina kind of spinning a bit out of control. The Iranian economy as well, the Turkish lira impacting the Russian ruble. So it's kind of a domino effect. But I think at the heart of the matter is the fact that these currencies have some sort of a peg with the dollar. And as the dollar rallies on the back of these rate hikes, these currencies are the first to suffer. We're the only country that is moving aggressively on the rate front. Everybody is either on hold or moving up a little bit, but we're outpacing everybody else, which means that the dollar is going to be stronger, we think, over the second half of the year.
And when does that start to take an effect? Like, we're talking about a stronger dollar, which the dollar is strengthened across the board this year, coming from G10, Euro, Pound, Aussie. But when you take a look at these emerging market moves, they're
Yeah,
20, 30, 40, 50%. That's,
right.
for some of these countries that import oil and import goods, that's dramatic.
Sure, it definitely is. They're small. They don't have enough of a base. They don't have enough of a foreign exchange cushion to support their currencies. And when they have a peg, they have to either defend it, or if they run out of bullets, they just have to let it go. So it's a problem. I mean, for some of these countries, it's a problem. And we were talking to some Turkish clients, and they were telling me that we're going to be moving away from borrowing in dollars. We want to start borrowing in yen or in euro, because the dollar is just too much of a risk for us, especially when you get sanctions imposed. Then we can't do anything.
How would that even work though if they're borrowing in other in other currencies and roughly dollar versus euro or dollar versus yen is moving 3 to 6%, something of that nature over the course of a year. These guys are still depreciating at 50%. So regardless if it's against the euro or yen. um,
Yes, they might depreciate a little less against these other currencies, but the sanctions is an issue, because if you're borrowing in dollars as a Turkish importer, and then all of a sudden your bank is sanctioned by the treasury, you're screwed. You can't transact.
exactly.
So you sort of have you have to keep an eye on all these things, and better to stay away from the dollar banking system if you're an emerging market trader, as opposed to taking the risk that your country might get caught up in the crosshairs, so to speak, and be next.
Right, right. So on the trade stuff, back to trade with China, if things go well or if things go badly, let's take both those scenarios. How does the US dollar react on both of those?
That's a good question. I would think that if we make a deal with the Chinese, I think the dollar will weaken. It's kind of counterintuitive, but in a way, the dollar seems to be rallying every time the trade tensions simmer. So I thought it would be the other way around, but it seems that every time there's a trade dispute, or the temperature goes up, the dollar seems to rally. Conversely, when there are signs of progress, we seem to sell off. So that's the main thing in terms of what will happen with the Chinese. But more importantly, we think if there is a deal with China, this is the most important trading relationship in the world. I think a big source of uncertainty will be removed if we have some sort of a truce there, because our two economies, despite what Trump says, they're very intertwined. We depend on the Chinese to make lots of things that we buy. The global supply chains are all integrated, so it's very hard to tariff them out of the picture. I mean, if you could impose 100% tariffs on Chinese things, but there's still you still have to buy these things or import them, and you do so at a much higher price, which in turns means higher inflation, and it will accelerate the rate increases that the Fed currently is putting through.
Yeah, well, on what you're just saying there, it fits with what's kind of been happening so far this year, where the dollar probably would weaken, and it's almost seen as right now the dollar's strengthening and money's flowing to the U.S. on signs of tension and on signs of stress. And so if there's a deal, which would probably be risk friendly, it would almost be the opposite, where the dollar might weaken, and it's a bit of a relief. And that's been one of the interesting things for the year, is that everybody's been selling assets in other asset classes, whether it be commodities, emerging markets, but buying U.S. assets and maybe helping the U.S. equity market as well.
Right. No, I agree. I agree.
And I just want to point out dollar CAD's actually trading at the high of the day right now, up about big figure on the day. I guess on this news, people may be seeing some sort of delay, but we continue to think there will be some sort of deal at some point. And like you pointed out,
Right.
whether it be at 3 o'clock Eastern time today or by Sunday, we think something will develop. But it's dollar CAD in the FX market is not necessarily agreeing at the moment, or showing a little of distrust.
Yes, I see it. We're on our lows. That's correct. Yeah. 130.70 right now.
What about correlations? Everybody looks at correlations in the markets: dollar versus commodities, bonds versus equities. There are all sorts of correlations that have been closely monitored for decades. What sort of correlations do you see right now and make sense?
Well, the main one is dollar commodities. The rule of thumb is as the dollar rises, commodities fall, and vice versa. However, I read a study by a very well respected economist. He looked at that relationship going back decades, and it's not as clear cut as what you read in the press. He found a correlation of about 40%, which isn't very high. But certainly over the last 6 to 9 months, that seems to have held. Whenever the dollar has rallied, gold has moved down, and we saw in the last 2 weeks the dollar index. Forget about individual currencies, but the dollar index sold off to a 1 month low, and that kind of sparked gold higher. So for now, that seems to be a going correlation. The gold silver ratio, gold platinum ratio, I really don't subscribe to it that much. I know a lot of people trade it, but to me, those are both separate commodities. Gold is, uh, you know, sort of does its own thing. Silver very typically follows gold up and down. I think the correlation is something like 85%. But sometimes silver moves with the base metals group as opposed to gold. So when we see weakness in copper and nickel and zinc, silver, along with platinum and palladium, also come off. So it's kind of it has a foot in both camps, silver. Platinum and palladium very much an auto play, with the catalytic converters and car sales in the States and in China. That seems to be the main drivers in platinum and palladium. Auto sales worldwide seem to be slowing a bit, including in our markets and certainly in the Chinese market. And as a result, we got both of those metals really dropping sharply in August before recovering somewhat.
Well, that's what I was going to say. On that note, since you really pay attention to the metals, is there some sort of metal play that's off the radar, like whether it be buying palladium, selling copper, or including gold, silver? Like, is there any sort of ratios that you're looking at that are piquing your interest right here?
Again, the ratios, it's hard to assign a ratio. In the LME metals, people look at the zinc lead spread, but a lot of people have lost a lot of money betting on that. Um, Silver gold ratio I already talked about. Um, None of the metals particularly stand out. What was really sexy a couple of months ago was nickel. Nickel was the metal that you need to build all these batteries for the electric vehicles, and it seems to be one of the more core, stable ingredients you need in these batteries. So everybody got really excited about nickel up until, of course, a couple of months, 2 months ago, when we started selling off, because there's just been a lot of nickel coming into the market, and people are realizing that this electric vehicle thing, although it's growing, it doesn't really gain traction until 10 or 15 years from now. That's when the projections are calling for a huge market share in terms of the EVs. But I'm very skeptical of long-term forecasts, because things could change. Batteries could change. You might find a battery that doesn't need nickel or cobalt or lithium. People are working on that. So to kind of extrapolate using these spreadsheets to say, okay, we're going to be here in 10 years and we need 3 times more copper and 5 times more nickel and 10 times more lithium, that's dangerous. People don't have the patience to wait 10 years for something to play out.
Absolutely. No, that makes a lot of sense, and that's really interesting, especially like what you're talking about, how nickel is really looking at that electric market, and people exactly that, going looking too far ahead in a spot market. That's sometimes a problem, getting too bullish on that, and then probably with the strength of the dollar and the correlation of the other metals, probably took it down as well.
Right.
So, coming into the last 4 months of the year, this is typically, a volatile time of the year. You mentioned before we're taking a look at trade, we're taking a look at the dollar. Anything else on the radar that you think the market might be taking signals on?
Um, you know, again, I've been very amazed by the surge we've had in US equity markets. I think we're long overdue for some sort of a correction. We're not seeing it because earnings have been so solid, and the earnings are solid because comparisons to last year look terrific. But keep in mind, going into 2019, the comparisons won't be the same. We're going to have two more rate hikes this year, possibly three more next year. So I think the equity markets are probably long in the tooth a little bit, and they could have a domino effect impact on some of these other markets if we really see a substantial correction.
Yeah, you're not alone there. A lot of people have been echoing similar sort of thoughts on, how the S&P is kind of treading up here. It seems like it's technology continues to heavily
Right,
outperform, while there isn't really, because a lot of people don't want to put assets anywhere else right now at the moment. But that can change very quickly, as we
right.
saw in February, and so we continue to monitor that. It looks like right now the S&P is traded down a few points since we've been speaking, and dollar CAD continues to trade at a new high, not aggressively higher, but just still keep ticking up. And so we'll definitely be keeping a close eye on dollar CAD over the rest of the day. But Ed, thank you very much. A lot of great information. Really, deep dive into that metal side. It'd be interesting to have you back talking about some different, analytics on metals as well that you see. But thanks a lot for joining us.
Sure, my pleasure, Mike. We'll do it again.
Great. Speak to you soon.
Okay, thanks.